businesses. One is exterior remodeling, roofing, siding, windows business with my husband. We're in Minneapolis, Minnesota. So my goal is to transition as much as I can out of the business. But we just finishing our 13th year, and I've done the books and, small business, have do the things. One is exterior remodeling.
Uh-oh. Getting feedback now. What happened?
Yeah, it should be okay now.
Okay.
And then I also am a essential oils wellness coach and advocate. And that's where if you ask me about roofs, yep, they're necessary. But if you ask me about health and wellness, emotional health, I could talk for hours.
So since you used a word that I know, you spoke generically, but you used one word that I know. And when you said advocate, that tells me that you're with doTERRA.
Yes. Yep.
So you're in luck, because not only do I know about taxes inside out, I am an expert. I also know about taxes with essential oils because I also have a doTERRA business. And so that helps in the sense that I know how doTERRA works inside out. And so from the tax perspective, there's lots of little nuances that people don't even think about.
Oh, wonderful. There's a reason I showed up then.
That's what, when you showed up, I was going to say, oh, you guys have a lot in common. Because Amy was on my show and came and talked about the oils.
Well, and so, yes, we have the oils in common, and yes, we could talk for days, not hours, but, but, today's topic is more the money and the tax side of it. So I find that oftentimes with network marketing, people, just like a lot of tax, just like a lot of everything, there's so many misconceptions. There's so much stuff in the world to know that people get like a small little inkling of it. And one network marketing company is not the same as another. I love doTERRA's pay structure because it's straightforward. Some of them aren't. And then what kind of entity for your business do you have for your roofing?
We have an S Corp.
Okay. Do you have employees?
Well, my son, there's three of us on payroll. We subcontract everything. Okay.
And then do you guys have accountable plans set up for like or do you have like a separate office, or do you work from home? Of course, during 2020, everybody worked from home.
Yeah. 8 years ago, we shut down our office in a nearby suburb and put it in our basement of our house. Okay. And then 2 years ago, we were actually about ready to open the office. And thank goodness we didn't sign the dotted line because COVID started and our sales manager passed away. So yeah, so we've been it's working out fine in the lower level, but we might be doing some, we're maybe this year or maybe in 2022 open an office. We haven't decided, we'll see how things go and how many more people we add on to the team.
Well, the reason I'm asking that is because if you have an office that's someplace else, that's just another expense like anything else. Whereas if you have your office in your home, now your business is using something that doesn't belong to it. And it might not even necessarily be paying for it. So you'd want to shift some of your personal expenses into your S Corp to lower the profit, lower the taxes.
We've been doing that.
So have you guys been doing that? Do you have an accountable plan set up for that?
I don't know what you mean by accountable plan, but we definitely, we pay ourselves rent and we deduct some of the expenses and things like that.
Okay, and you said you're doing your books, and are you doing your tax return as well?
Oh, no. And actually after 13 years, just changed our CPA because we needed more, we got more going on and needed more counsel. And so I have unlimited access to our CPA now, where I can email her every day. So that's awesome. And then,
wow, she's generous. I have clients like that too, though.
Yeah. And then our bookkeeper, I had a year or so break because we had a bookkeeper that came in and she retired in July. And then we hired a new bookkeeper a couple months ago. So we've been in lots of transitions right now.
So how are they having you do? because one, you said you weren't sure about you weren't familiar with the term accountable plan. Because let me think of a scenario that would be an easy illustration. So say your home is 1,000 square feet and 10% of it is used exclusively, and these words matter when it comes to tax stuff, the terminology matters. There's a lot of things that in the English language that we use interchangeably, and we assume that one thing means something else. Well, in the tax world, that doesn't exist. Something, certain things have very specific definitions that have nothing to do with anything else in the world. So it gets confusing. But so when you're using your home office, there's the very first thing you look at, is it exclusive and is it regular? So it sounds like it's regular because you guys have an ongoing business, but is it exclusive? So in the scenario that I'm setting up, 1,000 square feet is the home. And if 100 square feet of it is used exclusively, and when they say exclusively, they mean 100%. They don't mean 99%. They mean 100% exclusive. So say, for instance, you were a new mom and you had your baby with a crib in that office with you, that's not exclusive anymore. And technically you could lose the deduction. Now, do I press that much with my clients? Pretty much no, because, they're still working. But those are the rules. So what happens is now your corporation is using your space, right? So they need to pay for it. Your corporation, the business needs to pay the person for that space. Just like if you had a retail space, your business would be paying them rent. So the way that you account for that is the accountable plan. How are you determining what part of your mortgage payment or your rent payment, what part of your utilities, what part of your, whatever else you have going on there? In Minneapolis, is that what you said? So I don't know if you guys have propane. I live in California, so we just, it's simple out here. It's expensive, but it's simple. So I don't know if, all those different various heating kind of opportunities that you guys need out there. So how are you guys setting that up?
Yeah, like I said, we had the same CPA for almost 14 years. So, we have the lower level bedroom down there. We converted to our office, and it is 100% exclusive for the roofing company.
Okay.
So and I don't know, we never actually measured how many square feet, but.
So how are they determining because you said that the business pays you rent. How did you determine what that is?
We must have just talked to our CPA and said we use one lower level. We use one bedroom, and then we have a 3-car stall garage that we use for storage. I wouldn't say it's totally exclusive. It's supposed to be, but my son has a bunch of junk in there too.
Okay, so it's kind of interesting that you say that, because there's a lot of times when my clients will just give me the information. I'll ask, I need this and this and this and this and this. And then when I try to tell them, this is what I'm doing with the information, they're like, oh, I trust you. I said, it's not a matter of you trust me. You have a business. You need to understand how this works. So I'm glad you trust me, but it's bigger than that, And so that's one of the things that I'm kind of passionate about, is that people really do know their numbers. So that you know what's going on, so that you can maximize opportunities. So anyway, so that was just a total side note that I didn't know we were going to go down. And then Amy, do you? It's kind of fun this way because it's actually more personal with a small group like that. You get personalized listening here.
It's financial.
So with your doTERRA, are you actually doing it as a business, or are you just a customer?
I'm doing it as a business.
Okay, how long have you been doing it?
Be 4 years in January.
Okay. What rank are you? Not what rank are you currently, but what rank are you paid at? I guess. I know that fluctuates from time to time. Year to year.
Yeah, usually elite.
I'm sorry.
Usually elite.
Okay, so so as far now, do you obviously during COVID we weren't teaching classes outside. So I just want to make sure that you're maximizing all your opportunities with your doTERRA stuff as well. One of the things that it's kind of interesting, and I don't know what your CPA told you. Even my upline told me, oh, my accountant said just deduct, as far as your supplies, the oils that we buy every month. She said to me, oh, my accountant just told me to just deduct 25% of it is for business. And I said, just blanket 25%? She goes, yeah. I said, that's not right. And because you figure, okay, so we have our $100 a month minimum, right? Now, do you take Lifelong Vitality?
Yes.
Okay.
Oh yeah.
That's $79.50 right there. That's not a business expense. So if you're keeping your monthly minimum, like certain months we buy, like in December, we buy a whole bunch because we get free frankincense, or like this month, we're going to hopefully have BOGOs. So we spend more money in certain months, and then other months we might have to scale back because, we all are supposed to be paying somewhat attention to our budgets. But if you think about it, depending upon what you use for yourself and your family, if you guys are using, think about it, you're using the shampoo and the conditioner. Now we have leave-in conditioner. You're using the skincare, you're using the toothpaste and the mouthwash, and you're using the deodorant. Well, that's all stuff that people buy at Target. And I know there's a Target in Minneapolis because that's where they're from. So say you're buying all that stuff at Target, and especially if you have a family, I think you said there's 3 of you, you can spend $100 on that stuff. And so that's all personal consumption. So that you need to look at. Don't use a flat percent because it's almost absolutely not accurate. And in an audit, you would lose in a heartbeat. So when she told me that, I tried to explain to her, that's not accurate. She shut me down. I'm like, that's fine. That's not, you're not my customer. You're not my client. So I'm not going to drill down on you. If it was my client, then I would drill down on him and go, look, you're talking, the IRS already doesn't like network marketing. we already have a point against us. So let's try to make sure that our numbers are, that we can substantiate them. So stuff like your convention kit, that's 100%. I buy 2. I buy 1 for business and 1 for personal. Because I use that convention kit to teach classes, because I want to promote the new products, right? So that's 100% because that's product familiarization, that, and you're going to be using it as demos, you're going to be teaching classes, if you're doing vendor events, you've got all that stuff on display, et cetera, et cetera, et cetera. The other thing with I guess with all network marketing or direct sales kind of situations, when you order each month, people say, well, how do I know what's parts business and what parts personal? I says, well, each month when you go to place your order, you're deciding what you're going to order. Oh, I'm out of Serenity, I'm going to order more. Or, oh, I'm teaching a class, I'm teaching a make and take class. I better order some more of this. Or, oh, it's my sister's birthday and she loves whatever she loves. She loves the citrus bloom. So I'm going to order some of that. Oh my gosh, it's Christmas time. I'm going to order all the new holiday stuff that they're, just released 2 weeks ago. I didn't even have any men in my family that had beards, but I bought the beard oil. So when you're ordering each month, you're deciding what you're ordering and why you're ordering it. So as soon as you place that order, print out that receipt. And if you don't know how to do that in a PDF, I can teach you. It's super simple once you know. And then you just write down, right next to it, this part's for business. This part's, it's a new oil, so it's product familiarization. These oils are because I'm teaching a class next week, or I'm going to be sampling. I don't know if you subscribe to the sampling thing that doTERRA suggests. If you do subscribe to that business model, then you're buying those little dram bottles. You're buying the oils to fill them all. And so when you're ordering, you have that in mind. You're just not just making a blanket order. You're deciding, how am I running my business? What am I doing? What am I buying for personal? What am I buying for business? Well, right then, once you've made that order, write it down on your invoice, because you're not going to remember a year later what you did. Because people go, well, that's too much work. I said, it's about 30 seconds worth of work for each order. Because you know what, at the time, why you ordered it.
Right.
People go, well, I have to use my personal oils, for my class because I ran out or whatever. And I'm like, well, okay, that's fine. You can make adjustments, but at the time that you're ordering, write it down so that you remember. Let's see, what else doTERRA specific? Obviously, if you go to convention, 100% of that is deductible. Did you go to convention this year?
I did. It was awesome. Did you go?
No, I did not. Other than last year, it's the first time I haven't gone. So it'll be the last time I don't go.
Yeah, it was
So
awesome.
one of the things to keep in mind, and your CPA person, your tax person should know this. Typically, for all your expenses, so you have travel expenses there, you have your lodging, you've got whether you're taking a metro or a rental car or whatever you've got going on while you're at convention, all of that's 100% deductible. And you can lump it all into travel. That part's fine. The meals, though, are typically deductible at 50%.
Mhm.
For 2021, and as far as we know, it's only going to be for 2021, they're deductible 100%. So different people, different states have different continuing education requirements. So make sure that your CPA knows that.
Okay.
That you're going to get your business meals 100% this year versus 50%. And it's been 50% historically. That's just what meals have always been, is 50%. But they use the tax laws to manipulate behavior in society. And they were trying to encourage, because the restaurants got so hardly hit during COVID, they were trying to encourage people to eat at restaurants more. So the restaurants are deductible 100% for 2021. Going forward, I don't know yet. I haven't heard anything about that. So make sure that you get that extra 50% deduction.
Oh yeah, thank you.
What else would be doTERRA specific?
So Marianne, what's the best way to organize all that paperwork? I mean, like if I'm doing or keeping track of even like my business expenses and stuff, is there like a software I should be using, or just get a notebook and keep track of it that way? What's the best way to, I know you do like a whole know your numbers program. But how do we organize that? That's where I get into, because I have papers and then I have them all over the place.
Okay, so I'll tell you what I do. And then most people won't do what I do, because I'm a numbers person. I'm a numbers nerd. I'm a detailed, really, really detailed minded. I cross-reference everything. I dot all my I's, I cross all my T's. So, and just like in a lot of things, redundancy. Just kind of like you don't store all of your stuff on your computer, because if your computer crashes, you've just lost everything. Okay. So that's another thing too, with your business expenses. If you have them on your phone, if you have them in the cloud, if you have them on your hard drive, make sure that you have them backed up someplace else too. If you are paperless, which a lot of people are in today's society, if you are paperless, do not have it in only one place. Because if for some reason, whatever it is, you can't access it, you are out of luck. And as a self-employed person, nobody else has that information. Nobody else has it. If you lose your W-2, your employer has it. The IRS already has it. There's all kinds of other sources where you can pull some of that information from. But your business expenses, when you went over to the office supply store, or when you, now in doTERRA, you can download it from them. By the way, do you know how to download all your stuff from doTERRA, Amy?
You mean to print the invoices and stuff?
Yeah, do you know how to go into your back office and grab all that stuff?
Yes.
Okay. And so, okay, so say for instance, you go to the store. Let's say Costco, okay? Because Costco has personal and business, or Target. Do they have Target in Connecticut, Sally?
Yep.
Okay, so Target, Costco, wherever you're gonna go, Walmart, they have everything. They have business, they have personal, they have everything in the world, right? So you go there, and if you buy $150 worth of groceries and one ream of copy paper, make sure that you have that, whatever the business expenses are. And Amy, if you're buying like a Walmart, you might even be buying like little doodads for a display at a vendor event. Okay.
Mm-hmm.
Whatever you're buying, if it's related to business, and Amy, since you got two different businesses, say you got some note papers a ream of paper to print invoices for your roofing company. And you got some little wooden crate for a display table for your doTERRA business.
Mm-hmm.
And you bought spaghetti sauce.
Mm-hmm.
Separate your purchase into 3 separate categories and pay for them separately and get 3 separate receipts. And at first people go, I don't want to do all that. It doesn't take very long before it just becomes second nature. And I'll tell you why. The reason you want a separate dedicated receipt is because now you get business miles.
Oh.
Okay. If you go to Costco and buy $500 worth of stuff, and so you bought, or say you spent $1,200 worth of stuff, you bought a laptop, you bought some, paper, you bought some ink, you bought some whatever, and then you bought one of the rotisserie chickens.
Mm-hmm.
That's not a business trip anymore. You spent $1,200 on business and you bought a rotisserie chicken for $4.99. I don't know if you guys are familiar with the $4.99 chicken at Costco.
Oh yeah. Oh yeah.
So the thing is, because now you've commingled it, it's not a business trip anymore. You just lost those business miles. And business miles add up. Now, we didn't have that many. We didn't have very many at all in 2020. We had a little bit more in 2021, but normally and I told people, don't get out of the habit of tracking your miles. Someday we're going to be driving again. And now we are. I don't know where, how it is where you guys are, but California is pretty much open. We all have to, the mandate is very heavy handed, but we can still go. We can still drive all over the place. Most stuff is open. And miles are like 58 cents a mile. You drive 100 miles, that's a $58 deduction. And so now that $58 deduction is not only going to reduce your income tax, it's going to reduce your Social Security tax. And depending upon where you are in your S Corp, Amy, that's maybe, that's going to be varied. But still, you want to reduce income tax as well. So what I do, I go to the store, whatever store it was, I got my 3 receipts. Because I bought groceries, I bought stuff for my doTERRA business, and I bought stuff for my income tax business. Okay, so I'm another example. I've got 2 completely unrelated businesses. So I come home, and I'm just telling you what I do, and then you can tweak it accordingly. I enter it into Quicken. If you have QuickBooks, you have whatever Excel works. I don't recommend it. I'm an Excel queen. I use Excel for literally everything, but I don't use it for my record keeping because it's a little bit more, if you don't know how to do formulas, but even if you do know how to do formulas, you have to do the formulas. You have to say, I want this column to add up. If you've got an actual bookkeeping software like Quicken or QuickBooks or whatever other brands there are out there, you don't have to set up the formulas. And if you're using Excel, say for instance, I realized, I put this as a tax expense, but it's really a doTERRA expense. I have to look, and now it's a 2-step thing. I have to pull it out of tax and I have to put it into doTERRA. Whereas if you've got the, QuickBooks or Quicken, you just change it right there. It's a 1-step instead of 2 steps. So that's what I do. I enter everything into Quicken. So I put, it's like a check register. What's the date? I use the reference column for how did I pay for it? The IRS does not care how you paid for it. They absolutely don't care how you paid for it. They don't care if you put it on a credit card and you're going to pay for it next year. They don't care if you paid cash, PayPal, Venmo, whatever, Zelle. They don't care. Money order, they don't barter. They don't care. They just care. Did you get income? Did you have an expense? And then with my receipt, I have this little accordion folder right here. Can you guys see this? It's just one of these little things, accordion folders, A to Z. So if it's Target, I put it under T. If it's Costco, I put it under C. If it's whatever it is, I put it under that letter. Then I reconcile it with my credit card statement. Then once the credit card statement's reconciled, because credit card companies make mistakes or merchants make mistakes, they don't credit you for something you should have been credited for, whatever. Then once that's done, then they go into my permanent file. If it was something like groceries, I don't need to keep that receipt. I kept it long enough to reconcile it against my credit card. After that, I toss it. Well, I shred it. I don't toss it. I'm pointing over here because this is my shred pile right here. It's empty. Yay. I empty it on Sundays. But so I shred everything. And that's something real quick. shred stuff, you guys. Identity theft is rampant. It's absolutely rampant. Shred your stuff. Then over there, I got a file cabinet that has 2 different sections. A to Z for my tax business, A to Z for my doTERRA business. Now, it's not A to Z with which vendor, because the IRS doesn't care what vendor you used. They don't care if it's Costco, they don't care if it's Walmart, they don't care if it's Target. They want to know, what category was it? Was it advertising? Was it supplies? Was it legal? Was it rent? You know, what category was it? Because on the tax return, that's how it gets reported. It gets reported by category. So if you want to know how to set up a filing system, I'd look at that. Now, are you a separate entity or are you a Schedule C? Sally?
Schedule C.
Okay, so look at the Schedule C, and there's like 20, they've changed it recently. There's like 20 different lines, and set up folders for each of those lines. And then as you get the receipts, and even if you skipped all of the in between and you weren't knowing your numbers and keeping track of stuff all year long, if you have an office supply receipt, you ordered something online from Amazon and some copy paper, and then stick it in that category right away. Even if you didn't account for it anywhere else, stick it in that category folder, so that if you're doing all your tax preparation in March of the following year, at least now all your office supplies are in the same folder. All of your advertising expenses are in the same folder. So now it's easier to go back and add them all up. That's not the method that I subscribe to and that I recommend, but it's better than what most people do. Most people really, I mean, if gauging by my own customer base, and this is like I said, this is my 25th year of having my own income tax business. So I have a pretty good inkling of how people behave at tax time. I have all these years experience with all of my clients, and they're not organized. They don't know what they're missing stuff. They don't know what's deductible. Even though I tell them over and over and over again, because that's not part of their daily life. They're not paying attention to it all year long. They're doing their life. They're figuring out, do I have to move? Did my car broke down? The schools are closed. Oh, do I have to wear a mask in here? How am I going to get my business going? Oh, I got in a fight with my husband. My kid's acting like a brat. I mean, that's life. It's cold outside. Oh my gosh, we ran out of propane. Or here in San Diego, it's 88 degrees and we're complaining that it's hot. So there's life going on. People aren't thinking about their taxes. I think they should a little bit more, just like I think they should have a budget a little bit more, and at least have it somewhere in your sense of consciousness. One year I had a client call me up in July and she goes, "Hi, this is Amy. We're at Home Depot." I'm thinking, okay, why are you calling me? And she said, we're talking to the guy about solar, and he's telling us all about these federal tax credits. She goes, so we wanted to call you, who's our tax person, who knows our situation, and say, do we qualify? They were conscious enough to know, yes, there's all this stuff out there, but do we qualify? They were very, very high income, very high income. And so over the years, they realized they weren't eligible for a lot of stuff because their income was considered too high. I don't know that there is such a thing as income is too high, but in the tax world, there definitely is. We have limits all over the place. So that's what I do. So it comes into the house, I put it into Quicken. That's the first thing I do, put it into Quicken. Then I put it into my little accordion folder so that I can, and it's by vendor, so that I can reconcile my credit card statement. Then once the credit card statement's reconciled, I put it into folders that are different categories: accounting, cleaning, maintenance, legal, insurance, office supplies, rent, travel, blah, 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 all the different categories. Then this was something, I only took one accounting class in college because tax isn't necessarily accounting. Tax is knowing tax law. Then in this tax class, in the accounting class, they teach us, you touch that piece of paper one time, So when that receipt comes across your desk, you do everything you need to do with that receipt, and then you never look at it again. Because now when I go to do my tax return, I pull all my numbers out of my Quicken or QuickBooks or whatever people use. So you, in theory, you should never have to look at those receipts again unless you get audited. So you have to save them, and they have to be talking about that, being legible. Okay, I went to Vaughn's today, the grocery store. So I have my receipt. Well, you probably can't see that. So it's a lot of the receipts nowadays are on thermal paper, and they fade. Or if you touch them with your oil from your skin, it wipes the ink. Gone. Treat your receipts, especially your business receipts. I mean, this is groceries. So your grocery receipt doesn't matter too much, but your business receipts, again, you're the only one that has those receipts. Treat those things like gold. Because if you go to an audit and the auditor can't read your receipt, they don't count it. There's some real hardcore auditors out there, and they're like, can't read it. Oh, well, too bad. I've actually even seen an auditor literally throw it away.
If you paid for it with if you paid for it with a credit card, though, you could show them the credit card receipt for no.
And I'll tell you why. Because that credit card receipt that shows your $150 at Target has no idea what it is. It could have been $150 worth of toilet paper. And unless you're a mini mart, toilet paper's not deductible, you know. If you're a mini mart, toilet paper's deductible, or, you know, that kind of stuff. But so yeah, or even a gas station receipt, if you're trying to substantiate, you know, how much gas you bought or something. You can buy candy at the gas station. You can buy soda. You can buy bags of ice. You can buy propane for your backyard barbecue. You can buy lots of other lots of other stuff at these gas stations. And so, no, a credit card statement is not. And the other thing is, on your credit card statements, I don't remember who else does it, but American Express will categorize it for you. They'll send you a summary at the end. You spent this much in this category. You spent this much in this category. They're guessing. When you went to Target, they didn't know how much of that money was for business versus personal. Or when you went to a restaurant, they didn't know that was, I don't know who this is. Hold on a second. Sorry about that. I don't know how to turn off calls on this new phone. You push the decline and it still keeps ringing. Sorry about that. You're asking about the credit card statements. So no, it doesn't, because it just says you spent this much money at this store on this date. It doesn't say what. Also, it might even,
So would it be beneficial then to take a snapshot of your receipt and record that?
Yes. And then another thing I do on my receipts is, now if you're buying everything online, then you don't have to worry about this so much.
Right.
But if you're not buying it online, let me give an example. Let me find something here. Okay, this is a Costco receipt.
Okay.
And what I put on, you probably can't see this, but this receipt's kind of faded. Can you see this section right? Hold on a second. Right there.
Yep.
See, it says D, Q, C, and then M.
Mm-hmm.
Okay. The D, because the receipts fade, right? So the D stands for date. I write down what's the date of this receipt. In case it fades, I want to know that it was in April. What was the amount? Q, did I enter it into my Quicken? So yes, so I've accounted here. Yes, I recorded this. The CC stands for credit card. Which credit card did I use it for? Because now I can go back and reconcile the credit card. And then M, which was the main point of this, was the M stands for miles. Make sure that, remember I talked about getting separate receipts so that you can count your miles for business. On this particular one to Costco, there's no miles because I didn't go to Costco for for business. I went to Costco to buy that $4.99 chicken. Or for instance, let me see if I have a, okay, here's a doTERRA receipt. Oh wait, this one's only $79. This isn't not my regular LRP order. I have to spend $100. 1 second, that's not it. But the same kind of concept. So what I'll put on the receipt is Is it a schedule? Because there's not only your business expenses. If you're doing charitable contributions,
Mhm.
so what I put on my receipt is basically which category is it? Is it, A, Schedule A is charity. And then I say who it was, how much I did, and the date, the credit card, all that other stuff on there. Or like on my doTERRA, I'm going to say Schedule C. So I just put a C. And then I put whether it's a tax, my Schedule C for my tax or my Schedule C for my doTERRA. And then again, like what category was this? Was it for education? Was it for supplies? Was it for, was I doing a thank you gift for somebody? Oh, on the subject of thank you gifts. And in doTERRA, we do a lot of gifts. So Amy, I don't know if you're teaching classes and giving hostess gifts and that kind of stuff. The tax rule is $25 value, you're not giving people money. But your deduction can be $25 per person per year. Are you guys on a calendar year?
Yeah.
Okay, so it's $25 per person per year. A married couple is considered a person, so you don't get two $25. So if you're giving them a pedal diffuser that's $44, you only get to deduct $25 of that.
Oh, wow.
Okay, and it's kind of crazy because one year I had a real estate agent as a client, and she would be making, she did real big expensive houses, and so she'd make like $50,000 on the sale of some big mansion in La Jolla. And I said, you have a lot under your gift categories. And I know that each of her commissions was like big numbers. So she didn't have that many sales. Each sale was real big. And I says, well, you're limited to $25 per person. And she said to me, she goes, $25? I made $50,000 off these people. How do I give them a $25 gift? And I said to her, you can give them whatever you want, but you get to deduct $25. And in an audit, the auditor will ask you, who did you give this gift to and how much was it? So, and people say, you talk about audits all the time. Am I going to get audited? I said, who knows? We don't know. They don't tell us who they're going to audit. I mean, that kind of, you don't tell the enemy your game plan.
Can I ask you a quick question too on that, or on a different thing that came up? So volunteering, I spend, I think, well, probably once a week, if not twice a week. Sometimes I drive down to Minneapolis to volunteer. So do I get to deduct those miles?
Sally, have you been around me long enough to know the answer to that question?
For what, for volunteering?
No, any tax question. What's the answer? And I should have said that at the beginning of this.
Depends.
It depends. It depends. It's always the answer. And part of a professional tax preparer, we do fact finding. So when somebody asks me a question, I almost always have to ask them like 5 or 6 more questions to give you an answer that you can count on. I mean, I could say yes, but you won't even know, but under what circumstances and how and when. You're not going to know all that. All you know is that I said yes. You don't even know if I understood your question correctly, right? All you know is that I said yes. So, and I'm not sure, are you asking me those volunteer miles? Say you went to a, what's the Habitat thing where you build houses?
Habitat for Humanity.
Oh, okay. Habitat for Humanity. I knew it was something like that. Okay, so you're in the roofing business. So you went down there as a roofing expert. You went down, you drove to volunteer, and now you're helping, and you're going to be doing the roof part of this house.
Mm-hmm.
Okay, this is just a scenario I'm making up off the top of my head. You might think that's a business expense. So I don't know. Were you asking me? Were you asking me as a charitable contribution expense for your business? Or were you talking about a charitable contribution expense for your the personal part of your tax return?
Really the personal, because I mentor down at, at Teen Challenge, Minnesota Adult Teen Challenge. So I drive down there quite a bit, once a week usually.
Okay. So when doing volunteer work, if you have out-of-pocket expenses, typically they're deductible. Now, just like my client that called me and asked me about the solar, it's a deductible expense. Whether or not you can take it is now another level of questions. So if you are itemizing on your tax return, and as a married couple, you're going to have at least $24,000 as your standard deduction. I think it's 24,800 this year, something like that. So it's at least $24,000 as your standard deduction. So if your itemized deductions exceed that, then yeah, you can include your volunteer expenses. If you're taking the standard deduction, then it might not matter. And then there's something this particular year, again, because of COVID, changed all kinds of stuff. All kinds of stuff got changed. So this particular year, people that don't even itemize, 2020, you could still deduct $300, but it had to be money. It couldn't be goods, couldn't be stuff you were given to the Goodwill, couldn't be driving away, doing volunteer expenses. It had to be literally money, actual dollars that you're giving to somebody. So this year for 2021, that number is $600. So if you guys aren't itemizing, that volunteer expense of driving anywhere is not going to be deductible. Do you know whether or not you guys itemize?
No. No.
No, you don't, or no, you don't know.
No, I don't know.
Okay, well, and let me give you a tiny bit more information on that. If you're using part of your household expenses, do you guys rent or are you paying a mortgage?
Pay mortgage.
Okay. Do you notice how many questions I keep asking you?
Right.
Yeah, I keep asking you questions because your answers are going to affect my response. So I'm sorry, did you say you're paying a mortgage or your rent?
Mortgage.
Okay, so your mortgage is a tax deductible expense. Now, whether or not you get to deduct it is another story, but it is a tax deductible expense. So are your property taxes. So are medical expenses, blah, 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 blah. There's all these other things. Now, your mortgage interest and your property taxes, part of that is on your business return. So depending upon what level that is, if it's 10% or 20% or 30%, if it's a third of your house, if it's if you've got a 2-story house and a full basement, that's a third, more or less. I mean, that's not really how it works, but more or less for illustration purposes. So then a third of your mortgage interest and a third of your property taxes are now a business expense. So that's going to lower what you can deduct on the personal side, which means that you might not be itemizing anymore. In 2018 is when they changed those rules drastically. And a lot of people stopped itemizing their deductions because of the new rules. Because the standard deduction got doubled. So people didn't need to itemize anymore. They were already getting way more deduction than they used to get. Now in California, I know that there's only 3 of us here and we represent 3 different states. So far we've been talking about federal law. So for California, when in 2018, it was called the Tax Cuts and Jobs Act. Massive, massive, massive reform. They changed the rules, they changed the IRS forms, they changed everything. It was almost like I was starting over again because the rules were all stuff that I'd known for 30 years didn't apply anymore. So with that, people didn't itemize anymore. But California said, we're not doing that. So for California, all the old rules still stood. So people only heard the federal part. They're like, oh, I don't have to keep track of all that stuff anymore because my standard deduction is more. Well, but that didn't apply to California. So I had to teach all my clients, don't listen to the news, listen to me. I'm telling you, you live in California, the California rules still apply. Now, I don't know. I don't know if I have any clients in Connecticut. I don't have any clients in Connecticut. Minneapolis, Minnesota. No, Missouri is where I've got clients. So I don't know. I don't know what the rules are in Connecticut. Obviously, if I had a client there, I would brush up real quickly. It's like, does this state conform? Most of the states did. The word is called conform. So most of the states did conform. California is different in a lot of areas, especially when it comes to tax. They're literally they're 2 separate tax returns. The rules are not the same at the federal level as they are at the state level. So it's 2 separate tax returns. So what was your question? Your question was, about the volunteer expenses. So if you can itemize, then yes. And it would be, and in that particular case, if you are driving and you're just sharing information, you're mentoring people, and then you drive home, this is something that I get asked all the time. Well, I make $30 an hour and I was there for 2 hours, so I think I should get a $60 deduction. 100% wrong, 100% of the time. Only something, and so that I don't have to say depends. You do not ever, at the state level, the federal level, this year, last year, next year, it doesn't matter. You don't get to deduct the value of your time when it comes to charity. Only your out-of-pocket expenses. So Amy, it has not even, say you filled up your gas tank and it cost here nowadays, because the gas is so expensive, it's like $100 to fill up your gas tank. So say you filled up your gas tank, you drove down there and you drove back and it took up your whole tank of gas. You don't get to deduct that tank of gas. You have to record your miles. Because that's just the rule. So if it was 25 miles each direction, you get 50 miles as a deduction. And then whatever, depending upon the year, the amount changes as far as what the amount, and it's like 14 cents a mile or something minimal, but it adds up. And I tell people, I don't care how minimal it is, take it.
Right.
It's your money. It's your money. Take the, well, one of the things I tell my clients, well, it also depends, because I know my clients. I've had the same clients for most of my clients I've had for a long time. And I've been doing this long enough now that I can tell pretty quickly if somebody's grasping what I'm saying to them. And if it's somebody that I know, they're honest as the day is long, they really care about what's on their tax return, I'm going to say like, oh yeah, that's good enough. Somebody else that I know is already pushing the limits and they're like borderline, I'm really starting to challenge them. Are you sure this is what you did? This is this and this is this. And oh yeah, that's what I did. I'm like, are you sure? I mean, because if somebody's just BSing you and they're just making up stuff, or they have spreadsheets, they've shown you everything that they've done. Then the people that I think that they're BSing me, I'll ask them more questions because I want to make sure that I'm not going to get in trouble. I have to do my due diligence and I want to make sure they're not going to get in trouble, because if they get audited, they're going to blame me. I mean, they're going to blame me. It's like, it's your tax return. So to answer your question, if you itemize, yes, your charitable miles are deductible in general. And for you, if you itemize, then yes, include them. So when you go to a tax appointment, give that information to your tax person, and maybe even ask them, is this deductible? And if they say yes, versus if they say no, ask them why, so that you start to understand. I'm huge. When I first bought my business from a former employer, it was eye-opening to me, because I would review the prior year tax return in front of them, and I'd ask them like, oh, well, what about this? And what about this? They had no clue. They had no clue what the numbers on their tax return meant. And I said to them, okay, here, let me explain to you how I operate. I operate a little differently. You're going to work. You're going to know what's on your tax return. And you might be tired when you leave my office, but you're going to be empowered, because you're going to know what's on your tax return, and you're going to know that it's right. So you don't have to wonder, you don't have to hope, you don't have to cross your fingers, you don't have to lose sleep at night, you don't have to wait till the statute of limitations is over, that did we do it right? You're going to know that it's right. You might not understand all the nuances, and I don't expect you to do that, because that's my job. That's why I do all my continuing education and stuff. But the concepts, it's important for people to understand concepts, because when you know better, you do better, right? When you know something, for instance, when you know that the stove is on, you're probably not going to put your hand on the burner. Okay. So when you know that something's flat out not deductible, you're probably not going to deduct it. So we only have a couple minutes. I don't know if this went at all the way that you were planning on, Sally.
This is wonderful. I'm just having a blast listening to you guys. Yeah, no, this is fine.
Okay. Did I answer your question though about how to do the record keeping? I want to make sure that that my answer was helpful. Because if it's not, let's talk on that for a minute or two.
Yeah, no, I understand that. I get, get one of those accordion files and keep track of it that way. So,
Well, the accordion,
Yeah.
at least in my system, the accordion file is only to reconcile it with a credit card.
right.
Unless unless this is where you're keeping your receipts as far as for the tax return itself.
Mhm.
And then real quick on the know your numbers thing. It's important to pay attention to your numbers during the year for a lot of reasons. One, even if it's a subscription to something and you're not using that service anymore, say you're doing Audible or whatever it is that you have a subscription to, and you're not doing it anymore, and you're not paying attention to your credit card because your credit card has about $8,000 on it and you're paying $50 a month. And so you don't dare look at that credit card because you see that the interest is more than your payments. You see that the balance just keeps going up. We're in total denial. So you don't even look at the credit card statement. So you don't know that subscription that you're not using anymore is still being charged. So that's one example. But for business, same thing. You don't want to be wasting money, but you want to know where your sources of income are coming from, and you want to know where your expenses are going. So say, for instance, you've got 5 different streams of advertising. You got Google ads, Facebook ads, billboards, whatever, yellow pages, the local newspaper, whatever. And if you don't know what you're spending on those 5 sources, and you don't know which of those sources are generating income for you, you're wasting money. And as a business person, the whole idea is not to waste money. The idea is to make money. And so if you can get rid of 4
Right.
of those expenses, you're going to save money. And the more money you save, the less hard you have to work. Because right now you're working just to pay those advertising expenses that aren't generating you any income. Or it would be another example. That's always an easy example because of advertising. But it's just important to know where your expenses are. If you are, what would be another example, you guys? If you're eating out too much, you're doing all of these business meals, and you're not generating income from it. The whole purpose of a business meal is to generate business. Otherwise, it's just a meal. It's not a business meal. The idea is that you're either thanking a customer so that you're creating goodwill and they're going to retain their business, or it's going to be to meet new people, get leads, or to find a power partner, or the whole idea of these meals is to generate business, to generate income. And if you're doing all this and you're not generating income from that particular activity, then you need to stop. And if you're not paying attention to your numbers in the interim, you don't know. You kind of have an idea, maybe. Some people don't have any clue. But even if you have a clue, I think it's better to zoom in a little bit closer in real time, because the numbers that we spent in January, February, March, and April of 2021, we are not going to remember in March of 2022, when we are scrambling at 10 o'clock at night, trying to throw all of our stuff together in one weekend. You're going to miss, one, it's horribly stressful. You're going to miss stuff. You absolutely will miss stuff.
Yeah.
And that to me is a cardinal sin. You don't miss tax deductions. You absolutely, but with that being said too, is I'll tell people, it's like, okay, look, you also have to keep in mind, yes, we don't want to leave any tax deductions on the table, but please don't make a project out of finding a $5 deduction. Don't go spend an hour looking for that $5 receipt that had you posted it 9 months ago when you bought it, it wouldn't even be an issue. But now you're going to tear everything apart. You're all stressed out. You're stressing out everybody else in the house, telling everybody, no, I can't. I'm working on my taxes. And you see that stuff posted all over social media. I spent all weekend working on my taxes. It's like, well, you know what? I don't feel sorry for you. That was your fault. You know? So any parting words? I mean, I could keep talking because you guys can tell I'm passionate about this. So if you guys want to keep talking, I'm okay. But I want to respect everybody's time.
Well, this was very, very helpful. Thank you for all the wisdom. I appreciate it.
And if you have questions specifically on your doTERRA stuff, you know, let Sally know. Or you see my name. I'm on Facebook. You can private message me.
I
But
appreciate it.
and so you said you have a new tax person.
Yes.
Have you? So 2021 is going to be new, or 2020 was new?
2021 is new. Will be new.
Okay, so a lot of tax people don't like network marketers. So keep that in mind. So you might, if you start to get any kind of resistance from them, I mean, I know a ton, you know, I've been in this business for 30 years. I know a ton of tax preparers, and a lot of them, even the ones that I know personally, a lot of them are just anti-network marketing. I don't know why. I mean, obviously I'm not, because I am one, but I love it. I think it's a great business model. But if you start to get pushback, then you might need to find somebody new.
Okay. Well, I appreciate your wisdom and your help. Thank you so much.
You're welcome.
And I'll let you know. You had a budget form or a thing, Marianne?
I do. Let me go find first, let me find the business expense one real quickly. Under forms, expenses. So hold on, Amy, because I'll post it in the chat so you can pull it up.
And then what I'll do too is I'll put it in my weekly newsletter next week for my
let's see, I have it down by direct sales. Here we go. It's just the one I want to. Here we go. Hold on a second. How do I do that from? How do I do that?
in the chat.
What it is, it's basically an Excel spreadsheet, because I use Excel for literally everything. There's no formulas or anything in here. I just like the way the lines are and the columns are. So I have an Excel spreadsheet. Actually, let me show you real quick. Let me do a screen share.
Oh, I gotta make you a co-host, I think.
Oh yeah, sorry. I'm used to me being the host, so it's kind of like, oh, do that.
Okay. You should be okay now.
The last time I did this with Linda on the phone, it was so funny, because I'm like, okay, well, let me go screen share, boom, boom, boom. And she started laughing. I said, what's so funny? She goes, I remember when you were learning how to screen share and you didn't know what you were doing and you were so intimidated, couldn't get it to work. She goes, now look at you, you're such a pro. I'm like, yeah, well, thanks to her. Okay. Oh, that didn't work. Yeah, so much for a pro. Why didn't that work? Security? Could have sworn I just.
We're here, we see it.
Oh,
Yep.
you do?
Yep.
Oh, okay. You know what it is? Because I have all this other stuff that's open that I didn't realize that was behind in the, let me back up all this stuff. Okay. So you guys can see this?
Yep.
Okay. Now you see all the little lines in here is just because I use Excel to line everything up. There's no formulas in here.
Okay.
But and if I can figure out how to put this into chat, I'll put it in there. But it's basically just as I scroll down, let me make this bigger. Okay. So as I scroll down, there's auto and all the different kinds of, things that you do with auto, business use of home here. And then, education, equipment, if you're depreciating equipment versus you're just buying stuff, the rules changed on that. Insurance, if you've got any kind of business insurance, legal, professional, office expense. This is if you're, you have an office outside of your home, if you're paying rent someplace.
Right.
If parking for your employees or your clients. I have a space that I rent for my clients. Let's see what else. Taxes, telecommunications, which basically nowadays is a cell phone. Travel, so all these different categories of travel. And then down here, I just have a whole bunch of lines so that people can add, if they don't know where to put it, they just put it down here and then we figure it out. Keep in mind, as much as you want to be consistent, and you really kind of like, for instance, here with the advertising, you really do want all your advertising to be under advertising. But if you put like flyers. See this first thing out here, it says advertising, it says flyers. If you put flyers under office expense, because you went to the local print shop and put up all these flyers, and you, in your mind, it was an office expense because you bought it at an office supply kind of place. That's fine. It doesn't really matter which category you put it in, because at the end of the day, all of these numbers get added up. It doesn't matter what category they're in. They all get added up to one number, and you have your total expenses.
Right.
So as much as you want them to be in the right category, it's not the end of the world if they're not. Okay. So it's important, but it's not critical. Does that make sense?
Yeah. Yeah.
So this thing, and it's just, you know, again, it's kind of like, okay, well, under auto or under advertising, these are all just different examples, because different people do. I should put Facebook on here.
Right. Facebook ads.
You know, I could put social media, but you know, it just kind of gives people an idea of what kinds of things are under legal, what kind of things are under, or people think, oh, wow, I never thought about insurance. Oh, I never thought about this. I never thought about that. Oh, I have an extra space here that doesn't belong there. Let me take that away. It's just, you know, to remind people go, oh, I didn't know I could deduct that. I'm like, yeah, you can. And I'm huge on, you know, which I've said a couple of times, I'm huge on not leaving deductions on the table, because you're leaving money on the table when you do that.
Right.
And we don't, it's our money. We worked for it, right? We all work hard.
Now, this is something you fill out every month, or is this something you do, or is this just for, you would just keep adding to it every time?
No. That's where the budget would come in.
Okay. All right.
And, or you just, if you're using Quicken or QuickBooks, you just keep adding it to it.
Okay.
And you just pull up your total for that category and plug it into your tax return.
Okay.
No, what this is a worksheet that I give to people, basically, that, you know, they don't have a system, they don't know what's deductible. This is kind of like just a general kind of a thing.
Okay.
So people even know, or if it's a new client, I'll give them this. I'm like, okay, go add up all your advertising and put one number in here. I don't want I don't want your receipts. I don't want your software. I don't want your anything. I want a total. That's because that's all I care about. And that's what the IRS cares about until you get audited. Then they want to see that stuff.
Okay.
But now walk me through this. How do I'm drawing a blank.
I think you would have to save it maybe as a PDF.
Oh, I can do that. And you know what? I just realized this isn't current. Hold on a second. Let me change this before I do that. 877, it's not 877. Hold on a second. It's 888. Here we go. 194, 108. Let me tell you a real quick story on the EFAC, an example of not paying attention to your numbers. When I first started getting my EFACs a long time ago, when fax was more common, more widely used, I got an online subscription to whoever it was, and it was $7.99 a month. And then it went up to $9.99. Then it went up to $12.99. Then it went up to $14.99. And I've been doing this for years. And I was kind of noticing that, you know, kind of. Then I noticed it went up to, I think, like $19.99 with tax and whatever else they were charging me. It was $21.54. And I'm like, oh, wait a minute. When did that happen? I'm paying $21.54 a month for a fax service that, out of all of my clients, I've got a couple hundred clients, 5 of them use fax machines. I'm paying $21 a month for something that 5 of my clients use once a year. That's crazy. That's crazy.
Yeah.
So it was one of my sessions. I was actually talking to people in my Know Your Numbers group, and I'm like, oh, wait a minute. I didn't catch this. I wasn't paying close enough attention. So I switched. All I did was go into Google, you know, fax services. And I found one that cost $5 to set it up. It's $3.99 a month compared to $21 a month. So for the first half of the year, I was paying $21 a month. For the second half of the year, collectively, I haven't paid $21 because $3.99 a month goes into 21 several times, right? So just that one little thing, because I stopped and thought, it's like, wait a minute, I seriously have not even a handful of clients that use this service. Why am I paying for this? That doesn't make sense. So That was just another example of knowing your numbers. And I was totally guilty. Or somebody else that I was working with, they said they made a comment just kind of in passing. I said, hold on, you just said something. I said, that's typically like a monthly fee. Oh, no, they don't charge me for this. I said, I think they do. I honestly think they do charge you for this. I don't think that's a free service. I said, take a moment. No, don't make a project out of it, but take a moment and go back and look. She came back and we do this, during our time online.
Right.
It's all on Zoom, so it's all interactive like this. And she came back and she goes, oh, you're right. I didn't even realize I was paying for this. I thought it was free.
Wow. Yeah,
So, so you catch little things, and those little things add up.
they do. They do.
And the thing is, if they started charging, say it was a free service, and then all of a sudden they just started charging you, and you're not paying attention, they're charging you every month. Well, now you go to do your taxes next March, and you notice that they've been charging you for a year. It's a little hard to go back a year and tell them, fix this. They're going to tell you, forget you.
Right.
You have to call us sooner.
Or you may not deduct it because you don't think you're paying it.
Mm-hmm. There you go too. That's another point that hasn't been brought up before.
Right. Because